What's up, everyone? All right, well, we're finishing up the week here with another small green day. Today was a small day. You know, this week was kind of funny because I sort of expected Tuesday coming back after the long weekend for things to be kind of slow, and they were. I would say I would rate Tuesday, if we look at the P&L that I had on Tuesday. By the way, this is my my 90-day equity curve here. So you could see I've had a dip, and I'm almost recovered from the drawdown that I had during the last week of December. So I'm coming back up, which is good, buying the dip, and hopefully I'm making my way back up here real soon. Who knows, maybe back up to here. So anyways, let's see. On Tuesday, I ended up locking up just under $6,000 of profit after fees and commissions, which was a solid first day of the year. And I mentioned that I was not expecting that at all. You know, it's like first day back, I was kind of like dip my toe in, but you know what? It just takes one. And we ended up having a couple of nice moves. And so, you know, I would say on a scale of 1 to 10, Tuesday was like maybe a 5. You know, it was good. I had a great day, but also it wasn't incredible. And the stocks I traded didn't end up really being a lot stronger later in the day. LBPH did go a bit higher, but you know, it wasn't perfect. So it's a pretty good day. And then came back in Tuesday morning, boom, another solid day, $3,700 net profit. Thursday, boom, $4,000 net profit. That's after fees and commissions. And so just like that, that's $13,000 in $14,000 in 3 days, or 3 days of trading. Now today, well, I don't have as much to show for today. Today, I at my most, let's see, let me move this over. There you go. At my most, I was up $1,300, and then I lost $700 on Nexi, and I was like, you know what? I think this is a good spot to walk away. I don't want to push it. I would rate today as a 2 on a scale of 1 to 10. And the reason I would give today such a terribly low rating, and I don't mean to be critical, but I'm going to be the judge here, and I'm going to say this was this day gets a score of a 2. It's because our gap scanner, we didn't have a lot of good gappers. That was the main issue. So this morning, we'll look at the actual gap scanner, Ross's top gappers. So this is a scanner that stops updating at the open. So this is a screenshot of time of what the market looked like. The DSS would disregard that because it was a reverse split. All right, so that one I'm going to forget about. So the leading gapper was AIMD. AIMD. All right, well, you can see I ended up trading that. So let's look at AIMD. AIMD was a stock that had a move that began early. So if we look at the 5-minute chart, you'll see that this stock kind of started its move. I don't know. Well, it even sort of started perking up a little bit after hours. And at 6 a.m., it was like popping up, pulled back, went higher. And so when I was sitting down at 7 a.m., it was down here. Honestly, this was 7:15. I have no idea where this volume came from. It just all of a sudden broke VWAP and was like right back to the high. The thing is, right here under 450, the problem with this stock was that it was crowded. And I've had some people asking me, Ross, when you say something is crowded, can you describe what you mean? Sure. So we're going to pull up the whiteboard here. Generally, when I'm looking at a stock, I'll use phrases like thickly traded, or crowded. I don't know why I'm writing this. So it's better just to listen to me. All right, so thickly traded or crowded. And what I generally mean is that when we're looking at the level 2, the bid and the ask, what we see is a stock is like 234, and it's, you know, there's like 10 buyers all at 234, and then it's 235, and there's another 10 buyers at 235. So it's very congested. Now, stocks can be very congested when they're trading in consolidation. So what we often see is a stock makes a big move, it pulls back, and then through this sort of area here, it can be very congested. This is where you're having a lot of sort of accumulation and distribution. People are buying, people are selling. You know, let's just say the stock is up 100% right here. So if it stays up 100% for 5 hours, essentially anyone who has been in for a while that wanted to sell had every opportunity to sell and get out and take profit. So like no one else is really kind of selling at this point. Now, as long as the company's not selling because they're doing a secondary offering. And anyone who's kind of wanted to short has had the opportunity to short. So if it's still holding up, then what we sometimes see is this breakaway here. And so it can go from being very thickly traded to and thinning out as it pulls away. But other times we'll have these stocks that become thickly traded and they just do a slow fade. You know, buyers don't really step up because it's not that exciting. It's not really moving. It's grinding. So crowded, thickly traded, grinder. So what was it? I have a bunch of sticky notes here. BNZI. BNZI, this is thickly traded. It's crowded. It's a grinder. And I did make a little bit on it, but it really was not an easy stock to trade. Nexi is not a grinder. Nexi is more thinly traded, 14-cent spread. That one can move. You know, but, and then what was the other one? Yeah, no, those were the two that I traded. So anyways, but I managed to lose on Nexi, even though it was maybe a little bit more thinly traded in the type I would like. But when I first pulled up AIMD, AIMD, I was just like, man, this thing it's thickly traded, big buyers on the bid, big sellers on the ask, 25 million shares of volume. And I pulled up the level 2 on it. And I was just like, you know, I just don't think this one's going to make a big move. So I watched it right here at around the $0.50. And I was like, I'm not going to get in right here. This is right into resistance, double top. But it ended up pushing a little higher. It drops down and then it pops back up. But I didn't trade it in here. That was the only spot maybe that I feel like I missed. And then it ended up fading off of that level. So no trades on AIMD. A second stock. So then my first trade of the day was on BNZI. BNZI. All right. So this one, I broke the ice on this at about $2.30. It was actually right here at sort of the beginning of the move. It popped up here to a high of 240, and I got in about 228. It pops up and then it comes back down. I lost 500 on the first trade. So right there, I lost 500 bucks. I thought it was going to continue and just be like one of those ones that really opens up, but it didn't. Anyways, it breaks here, as you can see, and it breaks again right here, as you can see. I had a really nice trade. I sort of sat out because I was like, I don't know. This feels like sort of cheap, thickly traded again. But once it broke over 60, I took my first trade, I got back in there for my second trade. And so as it squeezed up, I got in at 60. I got out at like 65, made 300 bucks. So now I'm down 200 from down 500. And then I got back in for the break of 3. And I did that with 10,000 shares. We got a nice break of 3. It goes up to 320. And I was like, boom, I'm out. Locked it up, went from red on the stock to green. At the open, chop, very choppy, quite risky. It tries to come up again, jackknifes, reverses, sort of choppy. So really, there was a little bit of action pre-market. But I'll say that today was a 2, because this is a stock that, you know, is a little cheaper. And even though the float's relatively low at 10 million, it's got 63 million shares of volume. It was a grinder. So leading gapper over here, that one's a reverse split. Second leader, it just wasn't clean. It was also a grinder. RCAC, this was a special acquisition company, or still is, a SPAC. The news was that they canceled a meeting to approve the business combination with SetJet. So I think they've already disclosed that there's the proposal to merge. And obviously that caused the stock to drop substantially. And now that they've canceled that meeting, the price has gone back up. Essentially, SPACs trade at $10 until they've merged. But when there's news of a merger, the price can go up if people are like, ooh, this is exciting. They're going to merge with like Truth Social, and this is, you know, a chance to get in on that. People bought that up. Or they're like, oh, SetJet? No. And then they sell it. So anyways, meeting has been postponed. I don't even know that it's like permanently canceled. I think it's just postponed. But anyways, so it goes back up, but it's been more or less sideways. See? So there's kind of no trade there. So that's that one. So that's off the list. This one was a grinder. BNZI is a grinder. DRMA is cheap. SGD is just been a cheap grinder stock. And that's it. That's the top of the scan, you know. And if my best days are when the top of the scan is strong, and I've got some stocks on it that I can do well on. That was the case on Tuesday, Wednesday, and Thursday. Yesterday was good. It wasn't fantastic. So I would say, this Tuesday was like a 5, Wednesday, maybe like a 4. I even think yesterday was like a 3, even though I did okay. The problem is, it's just these grinders, cheap stocks are tough to make good money on. So, I kept my head above water today. Trade in the small account yesterday and today. We'll recap those in the next episode. But it was tough because no leverage on AIMD. Didn't trade this one, of course. No leverage on this one, right? It's too cheap. So was kind of restricted in that ability to take good trades. And, it's tough. You just can't really make a lot when all the stocks are cheap like that, because I don't get the buying power. And that's what I want, is, a stock between 5 and 10 ultimately. So I think we might have gotten a couple. Well, Nexi. So Nexi, I gave back profit on Nexi, right? So this one was in the right price range. But the problem with Nexi was that, it's not day one of the move. Day one was back here. That's usually when I'm going to do the best, is on day one. This is a bounce day, and it did bounce nicely. It halted up at the open on light volume. It opens, kind of dip, rip, jumps around, and I started trading this. Let's see, I took 2 trades on it, and I actually lost on both of them. So my first trade on it was, let's see, where was it? No, it was right. It's right here. Now I got to look at my, oh no, okay, I'm sorry. So it opens, it hit a high of 744 right here, and I got back in for the break through the double top. It broke by 10 cents and then dumps right here down to $7. That's annoying. Then it goes up higher right here, and I got back in right here, and it breaks by like 5 cents, and then it drops again. So I got caught on this one twice. Very obnoxious. I don't know. It just was choppy. And you know what? It's kind of what I get. It didn't have high relative volume. It was not an obvious stock. I forced it. I shouldn't have traded it at all. I should have just said, you know what? Today's a 2. It's not hot. Don't push it. So that trade was at like 10 a.m. or something, right before 11, something like that. So, it doesn't really matter. No, maybe it was a little earlier, but it really doesn't matter. So it was just a very choppy stock. And as I look right now, that's our gap scan. Our top gainers, there's nothing moving right now. I don't feel like I'm missing anything by saying, it's whatever, 12:30, I'm going to call it a day. So I stuck around. I gave it a chance for things to move, but it's not happening today. So the days that I want to dig deep and stay longer are the days where it's like, a 7 or an 8 or a 9, when we've got some really serious momentum and things are, really moving. Days like today, it's just too easy to get chopped up and give back profits, especially if you force it. And I did force it a little bit, and I did get back some profits. But anyway, so after fees and commissions, today's a very small green day, but green is good. So close it down the platform. I'm going to lock it up and live to trade another day. I'll be back at it on Monday. So, I'm looking forward to a full week next week. We've got a full week, 5 trading days in a row. We haven't had that in a couple weeks. So that'll be nice. Hopefully we get, some good gappers. At the end of the day, I'm going to do the best on days when the leading most obvious gapper is not a penny stock. When the leading obvious gapper is a 90-cent stock, a $1 stock, even $1.50, $2, I don't usually do well on those. When the leading gapper is a 6, 7, 8, 10, 12, 15, $20 stock, and it's up 80, 90, 100% or more, it's got news, that's when I usually do well, because those stocks have bigger ranges. So the dips can give you nice swings back up. You can get nice breakouts when it moves higher. That's when things really get exciting for me. So that is what I'm looking for. And while I wait for it, I need to be careful that I don't dig myself a hole. I am just now, as you saw from my my P&L here, or my reports, I am just recovering, kind of getting back up here. It's okay to have red days. Look, red days happen, but I'm making some nice progress. I'd rather go sideways for a couple days and be patient, kind of wait in the tall grasses for that next stock to show up, and then, hit that, get some nice trades, and, start making some better progress. Ultimately, and I thought a bit more about, the daily goal stuff that I was talking about earlier in the week. I want to, no, so let me throw this at you. I'm not sure about this, but I was thinking about a daily goal of, my daily goal is to not have a snowball day, to not have a day where I spiral, to not have a day where I just screw everything up. I wonder if that's like going skiing and be like, my goal is to not hit a tree. And you're like, then you hit a tree. You know what I mean? Like where you're fixating on the thing you don't want to have happen and then it happens. But at the same time, trading is risky. We know that. And if I sort of set the intention and remind myself every day that, look, trading is risky on any given day, in a moment of impulse, I could slam an order for 25,000 shares and be down $2 a share until a halt down or something, and be down 50 grand. You know what I mean? Like if I have the money in my account and I give into that impulse, it could happen. So if I focus on discipline and self-control, and my daily goal, rather than being making a certain amount of money, is more on like capping loss. And my daily goal is to follow my max loss even. That might be a simpler way to do it. Because at the end of the day, the thing with having a daily goal is you really... So there's two trains of thought here on this. One is that you really are like powerless to what happens in the market. I mean, the market could be hot or it could be cold. Today could be a 2 or it could be a 10. And that'll be what it is. There's nothing I could do about that. The only thing I can do is trade what's in front of me. So if the market's cold, like it sort of was today, I'll do the best I can and I might still only make $500. If the market's hot, I might do the best I can and make 10,000 or 20,000 or more. So how much I make is not really something I feel like that's super within my control, which is kind of funny because obviously I'm the one trading. So it is to a certain extent based on skill and intuition and experience. But then once you have all that, it's waiting for opportunities. Like you could be an amazing hunter, or an amazing fisherman or woman or whatever. But if there's nothing there, there's nothing there. So I think for me, so that was sort of the one train of thought, that being focused on a daily goal isn't super helpful because it's kind of like, it just almost highlights every day the fact that, well, it's really not in my control. Because if I hit my goal, I should not walk away. I never do that. I don't walk away when I hit my daily goal, because if I walked away when I was hitting my daily goal, I would be capping my profits. Now, I'll say that for a beginner trader, and this is sort of the second school of thought, for a beginner trader, I do sometimes encourage get green and walk away, because it's important to build a track record of consistency. And so many beginner traders will go back in and just give back profits. So it's really important that if you have it, walk away. But for someone with more experience, once you have some profit, just because you hit your daily goal, to me, isn't a reason to walk away. If you hit your daily goal in 3 trades, this is a day the market's hot. This is a day, if any, there were a day, to push it. And just because you're short on your daily goal. So today, let's say I'm short on my daily goal. Should I keep pushing it? No. Today's a 2. Why would I push it on a day like today? I should be patient, bide my time, and then push it on a day when it's hot and let that day make up for today being slow. So I actually should factor that there'll be a small handful of days that far exceed my goal, and that maybe 20% of my trading days each year will contribute probably 80% of my profits. And then there's everything else, the rest of the days, which are going to be kind of slow, base hit days, just stay green, don't do anything crazy. And so I would say it's very possible that actually I could spend the majority of days below goal, and then a small percentage of days where I'm like triple the goal or double the goal. So the goal is kind of, maybe it's sort of not helpful. And that's what I was starting to kind of think, that it's not that helpful. But I do absolutely, at all costs, have to cap my downside. I have to cap my losers. So, should my daily goal be, it feels negative to say, oh, my daily goal is not to lose more than 500 today, or 1,000 or 5,000 or whatever it is. That feels negative because you're focusing on the negative. but as traders, we do have to manage our risk. So maybe my goal is to rate each day early in the day and ask myself, what is the quality of today on a scale of 1 to 10? And if today is a 2, then on days that are 2s, I know that I should walk away early and not push it. On days that are 5s, I mean, look, we could get very detailed, but on days that are like, today's a 2, days that are like 0 to 3 is sort of, you do one thing. Days that are, 4 to 6, you do another. And days that are 7 to 10, these are the days that are probably going to contribute, 80% of my profits for the whole year. The remaining profits are probably going to come from days like this, 15%. And honestly, you might even be able to argue, let's do some funny math here, that 40% of my profits are going to come from here. Wait a second. Now, I'm no mathematician, but that's 120. But then let's just say that minus 20% comes from here. Oh, it does equal 100. Gosh, this guy, he's always thinking one step ahead. So, what if that were the case? Now, I don't know, because every day last year I wasn't keeping a calendar of like a 1 to 10 score. So I actually don't know. It's a hypothesis. And the only way I could know it is if I start tracking it, and let's start doing that today. And let's do it for the last 4 days this week. So we'll do it for these 4 days, and then we'll keep evaluating it as the week goes on. And the goal isn't to come up with a rating at the end of the day. The goal is that in the middle of pre-market, I don't know, sometime between, 7, 8, maybe sometime between 8 and 9:30, I'm able to kind of come to a rating. And that will be based on, what's the gap scanner look like? How did my first few trades play out? And, how are things feeling today? So let's see how that correlates to profitability. And if I can then start to begin to develop a keener sense of what today's rating is, then I may be able sooner to be able to make decisions about how I should trade for the rest of the day, whether I should keep trading for the rest of the day or whether I should just stop. Now, one thing that we know is that at any time, a stock could come out with news. Right now, 5 minutes ago, or in 5 minutes, a stock could come out with breaking news that's huge, and the stock could go from 0 to up 300% in the next hour. It's out of my control. There's nothing I could do about that. That could turn a day from a 2 into a 10. But in my experience, my best days start strong and then just continue to get better. It's not typical that a day is a total dud and then all of a sudden out of nowhere something goes crazy. Those chasing those anomalies is going to be tough because they're random. So I'm not going to worry too much about that. I'm going to focus on the window when I trade the best, and that's also the window where I have the highest ROI on my time. Because something I talked about several times in recent episodes is that it's not my goal to trade and sit in front of the computer here for 12 hours a day. It's actually kind of funny because my neck has been hurting and it's like hurting right back here, and I was like, why is my neck hurting? Like, what's going on? And I was like, well, maybe it's a decade of sitting like this, going from monitor to monitor to monitor, because that's how I basically sit like all day long. Now, you don't see that right now because I'm looking at the camera, but as I'm sitting here, I'm sitting in my chair and I'm just going like this and like this and like this. Now, I have monitor here, and then I have these ones that are up here. This is a monitor here. There's another one right here. Now, I said I would not be using these for trading right now, which is true. I'm not using them for trading. I'm using my laptop, this old one here with 3 broken keys, and I'm using this monitor here, which is broken. And I'm using it because of the small account challenge. Now, I'm choosing during the small account challenge to trade in both accounts. So the small account, I'm trying to take a couple trades a day if I can, depending on the conditions of the market. And then I put that aside, and then I'm trading in my big account. So that's kind of my idea. But as a result, I have this funny setup. But yeah, it's not. It's just maybe I could find a better way to arrange this all. But maybe if I was sitting a little higher up, I could. This desk kind of has a. Anyways, this isn't interesting to you, but it's not my goal to sit here for 8 hours a day. Physically, it's just not healthy. This is not what I want to do. So the window of the day where I have the highest ROI is between 7 a.m. and 10 a.m. Really. that's kind of my window. So I'm going to rate the day based on around 7, 8, 9 a.m., between 8 and 9, how I feel this day is in that window. And yeah, I would say we did have some good action on Tuesday. I was really pretty pleased. I was surprised, but Tuesday was good. Wednesday was good. Thursday was a little slower. I did well, but it wasn't really that great. It was one stock that kind of, anyways. So yeah, I'm going to rate those days, and then I'm going to rate today as a 2, and we'll see how tomorrow plays or next week plays out. And maybe there's something here, and maybe this will be helpful for you as well. So it's a little bit of a different way of thinking about it, but let's see where it takes us. All right, so thank you guys for tuning in. Thank you for hitting the thumbs up. If you haven't already checked out my Small Account Challenge episode 1, make sure you check it out. A lot of questions about the broker. I put a link in the comments, and I'll pin it to this comment of my top brokers that I think are kind of the best. Small account broker, international broker, free commission broker, and then like active trader US broker. So I have 4 brokers that are sort of on my top list. I have accounts with 3 out of the 4. One of them I don't have an account with because, well, I explained it in the blog post, doesn't really matter, but it's really for international traders, at least in my opinion. So or maybe some short sellers, but anyways, nonetheless, thank you guys for tuning in. I hope you enjoyed this episode. I hope you hit the thumbs up and subscribe. Right now we're at 3,600 thumbs up, and I said once we get 10,000 I can upgrade this monitor. So that's not on this video. The thumbs up are on the video that's in the series. So if you haven't already hit the thumbs up, please do it, because I cannot wait to replace this monitor. This is the next thing I need to replace. So please hit the thumbs up. Help me get a new monitor. Hopefully, I don't know, maybe by the end of next week or the week after I can get a new one. All right, and I'll see you guys back at it on Monday morning. Have a great weekend. And a reminder, as always, in case you didn't know, trading is risky. My results aren't typical. I've been trading for a long time. I have a lot of experience. So manage your risk, take it slow, and practice in a simulator before you put real money on the line. I'll see you back here Monday morning.